The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for Larry Pesavento. Larry's traveling today, so it's my pleasure to be here. These are large shoes to fill, but I'll do my best. We're looking at the E-mini down just 25 cents, and you can see by this pattern that we're looking at here. Let me expand this a little bit here on the side. There. This on the left side is the daily chart. In the middle is the weekly chart. On the right is the monthly, and because it's the March contract, I don't have that much data. If I do the continuous contract, I'll get it, but then I'll get a slightly different price. Same chart formation. What's really important is that the E-mini 120-minute chart made an arch formation. You see this 120-minute chart had a low of 2359.50, then a rally up to the 2373 round number high, 10 o'clock on the 8th. Then it pulls back, and here we are on the 9th, testing 2359.50. In fact, what it did is it went to 2358.75, just a tad under. In my work, it has a whole bunch of repercussions. What it says is you have one, maybe two bars in which to climb back and close above the left side low. If you do that, not you, this is the E-mini. If the E-mini can do that, then it can bounce to the next area of resistance. Now, Larry doesn't use these particular, he doesn't use moving averages. I do. So 2362.75 was the 9-period moving average, but that's not the issue. The issue is that there has to be a rally and a close above the left side peak of the first peak of significance. In this case, it's this peak right here that was made at 4 o'clock this morning, Eastern Time, at 2366.75. If you go to the 10-minute chart, you will see that there's a pattern with a cup formation that said what I call is a Chapman wave inside wedge target resistance line. There's a left side, right side price time match, and that goes to the 4 o'clock time high of 2366.75 we're looking at before. And it says if it's going to do that, it has to constantly move above this dashed line, and that could take you until 20 minutes past 10. That'll be when Tom and Tommy are doing their show, and that says if there is a rally, and this is a leg B, and the idea in the Chapman wave methodology is to always try to get you to a peak D. Doesn't mean to say you can do it, but that's the objective of the Chapman wave: identify the lowest low bar, and then merely move successively high, and each peak is named alphabetically. Now, what's really important about this, let me just move this away here. What's really important about this whole scenario is that within the context of the daily charts, now this doesn't, these are rules that these are the Chapman wave rules, so it really is not dependent on the Fibonacci's, it's not dependent on the number of the Gartleys or anything like that Larry uses. If I can just move this computer away so that I can see this pattern that I want to show you right now. There we go. Right there. So in the Chapman wave methodology, we try to identify the lowest low bar and count each successively higher peak. Once you get to the fourth highest peak, other things can happen. So you see that's peak D right there, A, uppercase A when it's going up. 1 penny above that peak starts leg B. That becomes a peak B. Once it turns down, makes an inverted V-shaped pattern to make a little peak. That just exactly as if you're looking at a mountain. What is a peak? A peak is that inverted V. Even if it's an arch, it's still the left side. The right side is now lower than the right side. And then you go to C and a D. So at D, other things can happen. It can continue higher, but it's also where you've got to be very careful. Let me show you. In the E-mini, the daily chart went to a peak D at a 2401 round number high. I use round numbers. I've used them ever since for a long, long time, but it was really brought home. Larry loves to talk about the 1987 crash. He was on the right side of that, and he really did extremely well. I got my subscribers out going into the August high in 1987, and that October the 19th, when I was looking at the delayed prices, I kept seeing, and I had always made a note of round numbers, made a big deal of them. And if any of you were trading during that period, you would have seen on October the 19th, 1987, round numbers, General Motors, but unbelievable. General Motors, I can't remember the exact numbers, but say General Motors that opens at 56 because there was the Friday was down 300 points, I think it was, and then Marty Swire came on Wall Street Week with Louis Rooker and said, "Hello, I don't like to talk like this, but I think we're going to have a crash." Well, that crash occurred the very next trading day, Monday. And General Motors and DuPont and all of these Dow stocks opened at most of them opened at round numbers, and they went down so sharply, and they made round number lows, and they closed at round numbers. We didn't know the closing prices. Some people for days, because the delayed prices were. It was just an amazing thing, and I thought, wow, there must have been so many really astute traders and hedge fund managers buying at those round number lows. That's what, when you don't have time, you just shout out, buy at 44. Well, those are the days when you didn't have electronic trading as you do today. And you'd yell, or you'd quickly call your broker, or you'd try to get out as quick. You're not going to say, sell at 56 and a quarter. It's too many words. 56 out. and that highlighted for me what round numbers can mean. Doesn't mean to say they do mean that, but they can mean something very important, especially at turning points. Well, 204.01 was a turning point. I got a peak D in the E-mini. The E-mini is in a sell mode. All that implies is, when people say you're in a correction because it's down 20%, they use the 20% number. All it does is it clarifies what has happened in the history of the period you're looking at. What has happened? It doesn't say, hey, because you're in a sell mode, you're going to keep going down another whatever it is. It says you're in a sell mode. In this case, the MACD, the moving average, convergence, divergence, and the stochastic are very negative. So you could have a bounce. I think that after 5 days of lower highs and lower lows, look, we haven't even made a peak yet on the upside, and on the downside, we still haven't made a trough. Today we did 2359.50, 2358. Even today we've made a lower low. So I think there could be a bounce based on the 120-minute chart. Here's the 120-minute chart, and it's up 1 now. And I think there could be a rally. So let's go back to this. The arch formation can turn into a positive cup formation, trying to rally. But if it takes out the left side low, what you have to look at is how does it handle the next peak, and that'll be 2366.75 on the E-mini. All right, enough with that. And then I think we could have a bounce. Then I think we start coming down again into Friday, into next week. All right. Here we go. Let's run the numbers. So you've got the bonds. Bonds right now are down half a point at 147 and 14/30 seconds. You're looking at the same arch formation. Remember we spoke about the arch formation just a moment ago, both in the daily and the weekly. It makes this low on the left side of 146, 145 and 28/30 seconds. Really important. Basil Chapman sitting in for the one and only. We'll be back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman sitting in for Larry Pesavento. Trade what you see, and my service here at TFN is called The Opening Call. That's my daily newsletter, and I do the 11 o'clock to 12-hour show. That's called the Tiger Technicians Hour. So let's go to the E-mini just quickly. Look at the arch formations. This is a demonstration of what I'm talking about. You go to at least a peak D. Well, this went to a D, and then it's popped up to a fifth higher peak, which we call E. Then it comes back down. It breaks the low. And now what's really important is, remember, you got the next level of resistance, which would be this peak right here on the left. It took it out, and the stochastic and the MACD started to strengthen, and that started a brand new buy mode, and it's gone to peak C. I call it peak C1, C2, but I'm suspecting it will go to a D, and that's going to be very important. Then we're going to reassess. You see the green line here? This is the 200-period exponential moving average. Look how it's using that as a key support level. I even see a Gartley right here, but we'll leave that for now. Let's just go straight to the back to the bonds. See the bonds. What's really important is this arch formation in the daily chart. It's taken out the left side low. It's got 2 bars in which to get back and close above that low of 147.22, 30 seconds. We'll see what happens. If it cannot do that, it says that the next level of resistance is only 148 to 149, much lower than it would have been if it can trade and close above there. And the stochastic's trying to turn down. The MACD is still quite weak. So that suggests that there's still internal weakness in bonds. Most importantly, look at this. The pattern I look at here is this H pattern. It looks just like a lowercase h. And if the left side low, that's the arch formation we were looking at before, is taken out, it just has a whole bunch of implications. I have at least 3 rules that go with this. And we're looking at this really closely. And the Fed has said they want to have higher rates. And they've got the parameters. They've said every single one of the things they talk about: increase in jobs, increase in the hourly wages. Just a slew of things that they look at are all falling in place. It's just a matter of them saying how quickly we're going to move on any other. If we do raise rates now, when we'll be looking at the next move. And that's what I think is going to scare the market just a little bit until they get used to it. So let me get rid of the 120-minute chart right here. We don't need it for now because we're looking at the bigger picture. The bigger picture is that the 31-year bull market in T-bonds, and I've called this the Japanization of our bond yields, going to zero. Well, we almost were at zero back in July of 2016. Now look at what's happened for the first time. If I can show, let me try it. I'm going to do this, see if I can do this on the TYX, which is the 30-year yield, because I've got the, there it is. I'm going to squeeze this, squeeze. There we go. Okay. You see this 30-year Treasury bond interest rate, 1981 was the all-time high. And the price changes because it's a continuous contract, so it gets smoothed out. But September of 1981 was, let's call it, in this particular instance, 152, right? It is trading now at 31. So the relationship, because it gets smoothed out, we can't, it's almost like those 300% inverted ETFs that we can use for the short side. So what's really important is that it looks like for the first time we're about to challenge this long downtrend line, and it's a channel. It's incredible to think that from 1986, 87, where the channel itself, not the high in 81, but the channel actually started, the bonds have not broken to the downside and they're not broken to the upside. To me, this is one of the most, this should be in MoMA, the Museum of Modern Art in Manhattan. It is just the most beautiful chart. I would like to show it in black, but I won't do that now. It's just a beautiful looking demonstration of Kandinsky, maybe, Clay, maybe Paul Clay. So what we're looking at here is a chance, just a chance, that we could start a leg B in the monthly with the strongest leg A we've had since back in 2008 to 2010. That very strong move at the bottom of the channel. I call this the inside Chapman wave inside track propellant support zone, and this is the Chapman wave inside track repellent sell zone. And if it can break above that, if the stochastic starts to flatten out, it's at 86, we will go higher. Now, I don't have time. Maybe in the next break, I'll get a chance to do something else. We've got Robert in Chicago. Robert, how are you?
I'm great, Basil. How are you?
Very well, thank you.
So, Basil, the other day, someone called in, and they called about the Fidelity Contra Fund. The ticker on that is F as in Frank, C as in Cat, N as in Nancy, and T as in Thomas, and X as in X-ray.
Correct, yes.
So here's my question to you. I came across my parent. One of my parents owns this. And,
wonderful.
Is that right? So I got a question about how do you, and you mentioned that you know someone that has this. Do they ever sell it? Is there a point where they would actually sell it? I mean, again, I'm looking at a longer-term view on this.
Okay, so actually the someone that owns it is my wife, and she's had it for a very long time. I've never met Will Danoff, although he was there when I used to do a lot of work with Fidelity. He is one of the most outstanding. Nobody ever talks about him. He hates to be interviewed. He's just the silent guy behind it, unlike Peter Lynch, who ran the Fidelity Magellan Fund and did a fantastic job, but he was always in the news, and then he retired and he was in the news even more. But Will Danoff is very quiet, background guy. He does fantastic work, and the way he's, can you imagine if you have not 100 million or a billion, he has oodles and oodles of money, and he can't just buy. He can't say, oh my goodness, Apple looks a little weak today, a little technical thing, I'm getting out of 500,000 or a million. He can't do that. He sets it up and he does. It's just an incredible thing what really successful fund managers do. You've got to have admiration. They've got other people's money that they've got to look after. They take it very seriously. And look, it's only in leg C in the monthly chart. I'm just going to say to you, I could be wrong, but I'm saying this is a buy and hold. Just keep holding it because it is a spectacular stock. When the Dow is in leg D. All the other indices, the key indices, are in leg C, like the S&P, the New York Stock Exchange. I'm suggesting to you, keep holding it. don't worry about it. In the late summer, the beginning, the fall, we're going to have a look at all the indices, and we're going to say, okay, is this part of the coda? Is this that final part, or have we extended out further? But I love the fact that he's aggressive. He goes for stocks that most people haven't even heard of. He gets aggressively long. He does an incredible amount of homework. As I say, I do not know him personally. I don't even follow him. The first time I've looked at it was now is his first time since I looked at it since it was last mentioned, which is months ago. And before that, I didn't even look at it for at least a year. And I just say to my wife, don't even touch, don't even look. It is just a great buy and hold. And even here at a potential market turnaround over the next maybe week or two, we could have quite a bit of a pullback. If certain levels get taken out, I still say this is a very good looking stock. The MACD and stochastic are just now starting to build strength. I like it a lot. And at 106.86, I'm just going to say to you, yep, be prepared for a 3%, 5% pullback, but I like it a lot. Hope that helps
Basil,
you, Robert.
Thank you very much.
My pleasure. Thanks for calling. Robert in Chicago. I'll be back. Basil Chapman sitting in for the one and only Larry Pesavento.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. We're back in the Dow is open. It's down 5. The S&P is unchanged. And let's continue our look at the That was the great call, Robert. Good suggestion to look at the FCNTX, which is the Fidelity Contra Fund. I'm going to now go to, I was at bonds. I want to go to gold, GC. Gold is, I'm a little behind on the gold, so it may be not 100% accurate. I'm very behind on crude oil. I think I've got a 10-minute delay. But gold is down 3 at 1206. You see these descending lines here. You see, remember what we were talking about just a moment ago in the Chapman wave methodology? You look for D. There's that D. I also look for doji candles. I also look for what I call a silent doji, the one before a top, or the one after a top, or one before a bottom, or a potential bottom, or after it. And what we're looking at here is the declining. You've got a series of declining lows. I'm not even sure if you've got, am I looking at, yeah, that's gold, 1, 2, 3, 6, 7, 6, 7. Okay, and there's your first little tiny peak A right there, fails, it goes to A minus. It's in leg B to the downside. However, for the first time, the stochastic's at 8%. I'd said the other day, I think that the stochastic in the teens could go to the single digits. Here it is. The MACD's expanding. That's a negative, but the stochastic says, be ready for a little bit of a bounce attempt, and that bounce attempt could take it back to the 9-period moving average of 1224.3. Why do I say a bounce attempt? Because the weekly chart tomorrow, Friday at 4 o'clock, the week finishes, and so far the MACD is held quite well. The stochastic's still at 79%. That's close to 80% where I like it to be, and that's suggesting that the technical damage so far is more price-oriented rather than technical-oriented. And that says that allows for at least a relief rally, a relief bounce. My biggest thing here is that the weekly chart, we looked at this the other day, and I was doing the show with Tommy when Tom was out, the show that starts just after mine, the one I'm doing right now for Larry. And I said the continuous contract is really an amazing thing. It's making a bold formation. I remember back in 2000, I wonder if this is a chart that goes to 2000. No, it isn't. Yes, it is. That goes to 2000. It had made a spectacular 2000, huh? All right, let me see if I can get it in a different way. At gc.d, I think it's a D. At gc.p, that's electronic. Yeah, okay. So here we go. It made this incredible move, and I remember the XAU, which is the gold miners, it hit somewhere like 44, and I said, I think I've got a really good buy on this. Look at the bold formation that formed. Look at this. An unbelievable bold formation before gold started that huge move to the upside. See that bold formation right there? Now, let me see if I can make it smaller in size and show you the depth. Look at that, long, from 1996, the high, until it took it out. This is called the cup formation, or a bowl. I call it a bowl if it's very stretched. It's a cup if it's much smaller, narrow, let's put it that way. And look how it broke out. And that was the start of a major move. Now, let's just do this with gold. If this is the same sort of thing right here, and you're starting to move up in a bold formation, this could be a spectacular move. But now this goes to 2016. Now I have to go to the current one, which is GC right there. And you can see that a lot depends on that arch formation, holding the left side low. In this case, gold continuous contract of 1,062. And preferably not even breaking the low that was made more recently back in December of 1127, but instead moving higher. And if gold at any point in the next 2 months or so can break above 1,400, I have to be thinking that this trend line right here becomes the Chapman wave inside wedge. I really wasn't going to talk about it, but I did bring it up yesterday. And once I brought it up, I have no choice but to follow it up. Let me see, space to the right. Let's give it a 50. There we go. Look, that would happen. And that would say that under the current conditions, market conditions are going to get so to the point where maybe the Fed loses control of inflation. This could be an inflation move. I don't know. I'm thinking worldwide deflation because all these countries have become capitalistic, and they're trying to produce products over and over again. These products are the prices are being pushed down. Things we really need are going up sharply in price. Things we don't need are the prices are just drifting lower. So this is very interesting. So anyway, I wanted to do that. Gold breaks under 1,050, closes under 1,050. It's probably a different scenario. But anyway, I just wanted to bring that up. And now let's go to our nitty-gritties. We want to look at the currencies. So gold is trying to form a little base. I think it's going to try to rally, and then I think it'll make an arch formation, retest, and that makes the 1,200 area really important to hold. And let's just go. We've got silver. I'll do silver right now. Silver is at SI, and I might be a little behind on these contracts, trying to make a doji there. It's just giving, if I look at the 120-minute chart, the 120-minute chart is suggesting that this is the area it could try to have a bit of a rally. If we're looking at something like the nugget NUGT, because we had a call about that yesterday. See, the nugget trying to make a low when our caller from Wellesley in Massachusetts called yesterday. And basically what we're looking at is this low of 743 made at 20 to 10 is the low so far. And what I said, I was looking at the volume. I said I looked at the volume on gold, and I think there could be a move of 28 bars to the upside, whatever time frame it was. I think it was a 10-minute time frame. And if that's correct, and it holds, it could even go to 56 bars before it retests the low. So this is the same thing. We'll see what happens by the end of the day. Will gold have a bit of a bounce here? And let's go to crude. Let's go to the dollar, DXY. Now this is going to be very interesting. You see this little double top right here? Okay, being left a message. That's good. This double top in the dollar, it made a high of 102.26 on the 2nd of March. And today it made a high overnight at 102.25, 6 cents away. Now, what's really important, 7 cents away. What's really important is that we could be making some kind of a double top, and that leads us to the 120-minute chart. And if I remember correctly, I had not had a chance to update it. Let's do this together. See the 200-period moving average, how important. You don't need these moving averages until you need them. They just in background until they become important. And as you get closer, they become important, just like as if it was some kind of, you were looking at a gap or a particular candle that you follow. And there it is, peak E, and now we're coming back down. We made the peak D, second buy mode, we went to a peak E. MACD turns down stochastic. So the dollar now, that's what I'm saying. I think that we're in a very interesting situation right now. I still see internal weakness in the Dow and the S&P. The semiconductors had a move yesterday, but now I think they're giving that back. We're going to be looking at a whole bunch of things at the end of the day going into Friday's close. Why? Because there's a chance, and this is my contention, this is our positions, that there's a chance that let me show you here, that the dollar could be on a shorter term basis making some kind of a double top. There's the two fighting patterns here. There's the cup pattern in the weekly chart, and there's the arch pattern. The arch pattern starts to succeed if the dollar breaks under 100. You don't need much more to say that you're going to be going higher in the dollar if it can take out 102.50. Then it will immediately want to attack the last peak in the week of January the 6th at 103.82. I'll be right back. Basil Chapman sitting in for Larry Pesavento. We will be back straight after these important messages.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Hi, folks, we're back. Basil Chapman sitting. My show is usually 11 o'clock till 12. I'm sitting in for Larry Pesavento. My pleasure to be here. So the MACD in the dollar is still very strong. The 9-period moving average is still above the 9-period moving average. The stochastic is not really showing the same kind of strength that the price is and the MACD. And that says, you know what, there could be a bit of a pullback, could go chop, chop, chop to the side here as gold has a bit of a bounce. I'm calling it a bit of a bounce. If you look at the EUR-USD, that's the euro-dollar currency pair, it's trading this little choppy range right now. The MACD looks like it's just ready. Look, the histogram, these vertical lines that shows the distance between these two moving averages is narrowing. It's a 0% line. It's at 0.0009, but it looks like it's wanting to cross. But hey, the stochastic rallied sharply. The MACD rallied quite nicely, and yet the price hasn't broken above that leg B, 1.0639, the high of the 6th of March. Here's what I'm looking at. I think that there could be a little choppiness in the euro-dollar, but until the euro-dollar decisively takes out the low that was made right there on the 22nd of 1.04932, it could just chop it sideways. If it does take that out, this is definitely going to look like an arch formation, and it looks like it wants to go towards that 1.03 low that was made the week of January the 6th. If you look at the USD JPY, that's the Japanese yen dollar currency pair, this is in a leg B, and this is it usually travels in the direction, doesn't have exactly the same pattern, but it usually travels in the same direction as the dollar. I just want to fix this up here. I don't want to have that distance that you're looking at. Let's just go to a 7. Right there, 7. Now you'll see it way better. Look, here's the monthly. See, that monthly is still acting very well, holding above the 200-period moving average, holding above the 9-period moving average in the monthly. MACD looks like it's trying to turn up. My thinking here is that the dollar actually could have more strength to the upside as gold, which is at a spectacular move, takes a little more time to build its energy to move back to the upside. So in the meantime, the USD JPY trading at 114.78 up 0.40, it needs to take out 115.25 to really break this down to a little mini down channel that we're looking at, downtrend line that we're looking at that goes all the way back to both, that really is the high from January the 3rd. In fact, January the 3rd and December the 15th, it had just about the same high. and that's become a double top. And now we're looking at it building stochastic and MACD momentum. I think it moves higher. So I'm favorably inclined towards the USD JPY. I'm favorably inclined towards the dollar. On more intermediate term, on the shorter term, they could have a little bit of a pullback as gold has a bounce. So what am I missing here? I'm missing crude oil. Crude oil has had a real smack to the downside. It's trying to form a little bit of a base. You see, the stochastic is at 18%. I think the stochastic is probably going to go to 15% and then maybe even 8 or 9%, because the way that the weekly chart is looking, and with the arch formation, it broke key support levels. I just think that it could have an arch formation here, just like the gold if it bounces, and then come back down and retest the 49 level. I think it's going to go to the 48s as the next level. What's really important, do you remember the patterns we were talking about? For those of you who are just new to anything that I do, there's a pattern that I call the lowercase h that can go to a lowercase m. It looks just like this. I drew it earlier on, so I'm going to repeat it again. So this arch formation, it's successful that it didn't go all the way down to the low in crude oil and the continuous contract to the low of 37.47 made the week of, in February of 2016. But it also hasn't really broken the top side of 57.44. This last move was at 56.75. This is the continuous contract. So this says that the arch formation that goes from a lowercase h to a lowercase m could be a continuous pattern, and it could continue. There could even be a much larger one. But essentially what it's saying is that the base between 41 and 39 is absolutely key for crude oil to hold. If it ever breaks that, you've got to be real careful that crude oil isn't going to break down completely. Meantime, it's just stuck in a range. The range has expanded a little bit. I thought 51s to the 54s was the range. Instead, now we've got down to 49, so now it's making lower lows and lower highs. Let's see, quick question about KC, which is, KC is coffee, I believe. Yep, coffee. Coffee's trying to rally. It's made the H pattern. The previous one failed at a peak B minus. And now what we're looking at, look, right there, a little turn, a turn down, and a success. No, it wasn't successful. The low of 139.65, 139.65, a double bottom. So yes, it could be a bounce. It's a successful test. It's at 141.90, up 15 cents. Go to the 120-minute chart. Oh, well, not so great. Unless it can take out 142.55, and I would say quite quickly by Friday, I think it's just kind of stuck. 143s, in any case, should be the first big resistance. Now, let's go back to our chart we were looking at. You remember the 10-minute chart? And I said I had a target. Yep, there it is. We're almost at the target in a shorter time period. Leg C in the Chapman wave. I put the up arrow right there, and we've gone to a C. And the target we had was right there, 2366.75. We have just hit 2366.75. We've just made a little double top. Now comes the big test. It did it. We haven't broken out, but we broke the trend line resistance in a shorter period, because I had said by 10:20. And this is, oops, we just did it. Bam, just went right through it. So that's very important. Live, we saw the action and reaction, and so far this is very good. The Dow's up 24, the S&P's up 4. Now, this is going to be very important. We're just about to bump into some kind of resistance. We'll see how that resistance acts or reacts, how the E-mini can act. Now, I had a question about, what was the quote? The TNX. So the TNX, I'm going to first show you here in the chart with the white background. You see, what I was talking about is that cup formation and a test of the high. This is the pattern we're talking about. Remember the lowercase h? Well, this is the opposite. This is a reverse Y, right? An inverse. It's a complete, it's a complete reversal. So now you've got the cup formation. That's what I call the drop bucket formation, or the Y formation, double top formation. And we're going to see what happens with the TNX. It's up 26. And look what's happening in the monthly chart. Monthly chart right here. This is very important. This support, this resistance level. And I've drawn this in to say, we've been here so many times. What is different about this is that you've got the Fed saying we want to raise rates. That's really what's different. Look, this let me squeeze this closed right here. Look how many times the TNX has been at 25.78, 2.578%. Every time, look, back in July of 2015, that whole move back in June, July, the breakout of July of 2013, all that whole area of testing that went through 2009 through 2000. So we've been here before. The implication is something very different. Let me just keep squeezing this, because you'll see that this is the first time we even came down to the level in decades. That makes us very important if there is a breakout. Basil Chapman sitting in for Larry Pesavento, and I'll be right back. Dow's up 21, S&P's up 3.50. Let's see what's happening to our 10-minute chart right here. This is without the stochastic and MACD. This is the naked chart. Nice, holding very tightly. Good. We'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. Let me just quickly show you the cup formation here in the 10-minute E-mini. This is the left side high. This is the left side to the right side. This is called the plumb line. You've got to identify that plumb line. This is the Chapman Wave inside track, and we just broke out. Yes, we've got John on the phone. John from Philly, how are you?
Basil, I'm very good. Thanks for taking the call, sir.
Pleasure.
I am coming with something out of the blue on you.
All right, blew away.
And the ticker symbol is TELL, T-E-L-L.
Oh, I thought you wanted me to tell you. Okay, T-E-L-L. That's Tellurian. All right. So Tellurian is this the what is Tellurian?
Basil, this is formerly something called Magellan Energy. It was basically a bankrupt shell company, a publicly traded stock.
Okay.
The stock was acquired just on the cheap to get at the shell by a guy named Sharif Suki. And Sharif Suki is the man who founded and built Cheniere Energy, which is the United States' first liquefied natural gas export company.
Yes.
And that company virtually was bankrupt back 2006 and 7.
Right.
And then when the natural gas boom here in the U.S. took hold, he worked with his bankers to change Cheniere from an import company to a LNG export company with a big, huge project down in Louisiana at some place called Sabine Pass.
So let me just do this because we're about to run out of time. This is a very short segment. So I'm gonna, if you want, we can follow up during my show. Let me just quickly tell you that I'm looking at it just purely on a chart basis. It's 10.77 TELL. Trading at 10.81 right now, down 38 cents. My thinking here, you see the little doji that's forming? It's right in the area that's going to test the left side low, which is the low of $10, round number $10 from the 14th. I will do a little work on it, and I'll try to talk about it on my show. Do you mind?
No, that would be great. Thanks so much.
Thank you very much for calling, John. So Basil Chapman sitting in for the one and only Larry Pesavento. I'll be back for my show at 11 o'clock today. If you want to keep it listening, listen to Tom and Tommy coming up, and then my show. Thanks for being here. I'll be back later on.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.